As the crypto collapse rages on, some of Bitcoin's biggest investors have descended upon New York City to talk all things crypto and blockchain. Our Seema Mody joins us from the NYSE with more on that. Hey, Seema.
Hey, Melissa, that's right. A number of big names at the Consensus Conference weighed in on the crypto collapse today. Allianz's Mohamed El-Erian says despite the sharp pullback in cryptocurrencies, they are here to say, saying, quote, I think cryptocurrencies will exist and will become more and more widespread, but they will be part of an ecosystem. They will not be dominant as a lot of the early adopters believe they will be. Now, other market participants recognize the sustained drop in Bitcoin, but didn't seem as concerned about it. Listen in.
We price all kinds of things on our exchanges. We set the world's price of oil. We set the world's price of various interest rates. We set the world's price of various commodities. So we're kind of agnostic to price. I mean, we see prices every day moving around.
I think about the headlines today. Will Bitcoin, will digital assets survive? And I'd say the unequivocal answer is yes.
SEC Chairman Jay Clayton maintains Bitcoin is not a security, but initial coin offerings are. However, on the topic of cryptocurrency ETFs, he warned that the real risk is in the underlying asset.
The risk in the ETF is truly the risk in the value of the underlying asset. It's not a risk of theft or disappearance.
Bitcoin taking a break from its downward move, up about 1% in today's trade. Melissa, back to you.
All right, Seema, thank you. Seema Mody from the New York Stock Exchange. All right, so Brian Kelly.
That's me.
You know, and I said this to Vinny yesterday, Vinny Lingham of Civic, that the Bitcoin community on Twitter is very fierce. And so they've called you a number of names for being overly bullish. So tell us where you are in Bitcoin right now and how you've traded it through this decline.
So I can tell you through the decline, we've had a lot more cash in the fund than we have at any other time. We've probably almost 70% cash at this point in time. That being said, we're getting to a point where it feels more comfortable to start getting into this. So, you know, I am a believer in this asset class. I am a believer over the 5, 10, 20-year period that this is going to be a new asset class. But, you know, this is subject to massive booms and busts more than any other asset class out there. So it's important, I can't stress this enough, it's important to size this in your portfolio correctly and appropriately. 1 to 5% to me sounds like the right number. Then you can ride out these bear markets, which we've had several of.
So just to underscore, 70% right now of your portfolio is in cash.
Is in cash
and
right now.
Non-cryptocurrency.
Right,
okay.
And that can change very rapidly. Sure. I'm looking for a point where we get into this.
So in terms of catalysts, Jay Clayton was talking about the Bitcoin ETF or cryptocurrency ETF, which sounds like it's not going to come anytime soon, as a lot of people had thought it would be, and that would be a catalyst. Institutional money, we've heard from various people, they're not sure when that's going to be here either. So what is the catalyst that you're looking for?
Yeah, that's interesting. I mean, we have a couple different catalysts coming up, which potentially the backed launch, which is the NYSE or the ICE launch of futures. Fidelity will have their custody program coming up in January, so that may be something. But we haven't really seen that catalyst yet. I can tell you, though, we've seen actual institutional inflows, and you know, I think that over time, again, it might take a bit here, but we're going to start to see interest in this, and we're seeing transactions increase here. Which, if I saw transactions on the Bitcoin network fall, I'd be worried.